Welcome to Coverage and Coffee. My name is Caspar Harsey. Joining me today is...
Kit Brownlees.
Thank you for coming onto the podcast today, Kit. We've had a couple different interactions the last couple months, and I'm really excited to have you on because I think you have a very unique experience within insurance, right? You have a quite varied background. Do you want to give the quick 1-2 on who you are and what you do?
Yeah, sure, Caspar. I studied law at Oxford University and then qualified as a barrister. I decided I didn't want to spend the rest of my life in halls of one type or another. So I became an international lawyer, firstly with ICI, chemical industry, pharmaceuticals, which is a company which morphed into AstraZeneca. And then I joined British Leyland, and that was a very formative time for me because I was put on an international sales team. We were selling trucks and buses around the world, places like Iraq, Iran, Singapore, Venezuela. And I was the international lawyer assigned to that team. So it was very, very interesting.
Fantastic. And then you eventually made the leap into insurance. What was the kind of background on that?
Pure chance. I was speaking at a conference organized by some brokers called Hog, H-O-G-G, Hog Insurance Brokers, and they'd started up broking this new form of insurance called political risk insurance in the private market. And they thought that with my background in international sales and export credit, I'd be very interested in joining them. And you know what? I thought, well, I'll give it a go. If it doesn't work out, I can go back to being a lawyer. 35 years later.
I mean, it's the story in that people kind of stumble into an insurance is kind of a classic one. But I think that with your specific, I guess, stumbling that most people do, there's that connection between the legal aspects that you had worked with internationally and the political risk aspect.
Absolutely right. So when I was involved as part of the team selling buses around the world, we needed export credit, we needed finance.
Yeah.
And we'd get the export credit from government schemes like the then Export Credit Guarantee Department. So I was very familiar with the structures and what was happening in the private insurance market, particularly Lloyd's, that there was a lot of innovation going on, a lot of new products being thought about. And they thought, well, hang on, let's have a private market alternative to the government schemes. And so I was in at the vanguard, which was great because when I started doing political risk insurance as a broker, in getting the business in, there were only 2 syndicates at Lloyd's underwriting the business and one company, AIG. So it was right at the beginning. Now, of course, it's a big area.
Yeah, no, it is a quite big area. And I think that, you look at the news and whatnot and you see what's happening in different international geographies. The kind of concept of political risk is becoming more and more important, right? And there's so many different changes that's occurring even now. I heard recently that, there are Syrian companies, right, after Syria has now regained some stability that are beginning to look for insurance as well. And international companies are looking to kind of enter this market. And this is a story that's happened in multiple different countries, right, in terms of they kind of reopen to this insurance market. Yeah.
That's a very good point, Caspar. I'll give you an anecdote. Years ago, I was in Tehran, in Iran, speaking at the insurance conference, African and Asian insurance and reinsurance companies, and I was speaking about political risk insurance. And I looked out at this vast audience at the Iran Broadcasting Corporation headquarters, and I thought to myself, what do I say? You are the political risk. And and I met Rafsanjani and various other people. But the interesting thing was that after my talk, I was mobbed by exporters from Iran who wanted political risk insurance covering their exports to the Arab world and to Afghanistan, to Syria. So, everyone has the requirement for this type of cover.
Yeah. I mean, you think about the kind of politically risky countries and you realize that, there are people there who are operating in business the same way that people do here.
That's right. Every country wants to export.
No, exactly. And so for those who are listening in and are perhaps not entirely aware of what political risk is, right? Like the high level kind of definition of this is that it protects, businesses and institutions against losses from politically motivated events or government actions, Would you kind of add to that or provide a different definition?
Well, you're absolutely right. It started like that: government acts and actions, confiscation of foreign investments. So that was the beginning of the whole industry. But basically, it morphed into covering payments, non-payment, whether due to government acts, force majeure, or exchange control regulations, and that could be originally just covering public buyers. We'd call them public buyers, government departments, and ministries of defence. But as the market expanded, it's covering non-payment by private buyers. So it's been quite a big expansion.
So when you say non-payment by private buyers, is that, you don't have the authority to chase down the money that they owe in that country that they're in, or is that something else?
No, you do have the ability to chase down the money, under the legal structures. But what I would say is, I can bring it in now, is that there was some huge divides. 2008 was a big divide after the financial crash, because a lot of banks who were in export finance, trade finance, commodity finance, after 2008 pulled out of those markets, and so it gave it a huge opportunity for the private political risk insurance market to move into there, and that's when the whole widening of the market happened, away from what I call classic export credit and confiscation covers to providing deal after deal after deal for commodity traders and for financing banks.
Yeah. I mean, I do think that the classic thing that people think about with political risk is that, government in another country changes their opinion on you having business there and does this kind of force majeure, takes over your operations, right? I mean, we saw this a lot in Russia when the war first started, these countries or these companies kind of leaving Russia and the Russian government deciding, okay, well, we're just going to confiscate your assets and we're going to use those. Is this, looking at the Russia situation, and we're not making a political podcast here, but looking at the Russia situation, are these things that happen quite frequently? Because I feel like they happen when the big stories happen, everyone hears about it, right? We hear about Russia taking over McDonald's operations, and they have their own Russian McDonald's now. But does this happen on a smaller scale more frequently?
Yeah, it does happen. I mean, some of the cases I got involved in, going back years, one of the first one, Bulgaria, I had German clients who were building a massive chemical plant in Bulgaria when Zivkov was the president and dictator. His regime fell, and the next government cancelled the project. So that became a very large claim. And these are the sort of classic things that happen. Obviously, Russia's on a very large scale. And at the moment, in particular in Russia, there's a huge case going on in the aircraft leasing industry, where a lot of aircraft were leased to Russian airlines, and of course they're not being returned. So that's a classic dispute right now.
How do you? There's so many things that I want to talk about today, but before we leave that topic, how do you price something like that, right? Because pre-Ukraine war, or pre-Crimea invasion in 2014, I can imagine that the kind of perspective on Russia was that, okay, politically risk-wise, it is stabilizing a little bit, right? How do you ensure that the premiums you're collecting, when that happens, right? When that plane doesn't get returned, when that lease is then breached, how do you then actually price something like that?
I mean, pricing in political risk is tough. It's very difficult because it's not a modeling type of pricing. Certainly not life insurance.
Yeah,
it's a combination of factors. It's part of it is you've got your country limits. Okay, every insurer will buy reinsurance to protect their overall position, their book, and they will have country limits. So I might have a book of a country limit. I can only write up to, say, for example, $100 million on Russia at any one time.
yeah.
So clearly, what I want to do is to maximize my take on that $100 million. So I will be looking for what I regard as the best deals on Russia at that time. And other factors which affect pricing are the period, the tenor of the risk. The shorter, the better in some respects. Other people would say that they prefer to write military contracts because they're more likely to be paid. And there's a whole raft of things, and then of course there's competition. So if other underwriters are writing business at a lower rate than you, and you're missing out on business, then that's a factor too.
Yeah.
So it's really a combination of factors.
Yeah. And when actually, for some reason, that was kind of something I hadn't really expected. Now that you say it, it kind of makes sense. But the military contracts, because I immediately start to, in the context of what we're talking about, I start to think about the American exit from Afghanistan, right? In terms of the amount of assets and resources that they had in Afghanistan when they exited. Was that, either from knowledge or from your own expectations, was that an insured event that had payouts, or?
No, that wouldn't be. That would be, they'd just write that off. That would be in the government. They wouldn't.
Okay.
No, they wouldn't.
Okay. Yeah.
So Afghanistan, frankly, there wasn't much cover written on Afghanistan because it was basically a war zone, and so much money being pumped in by the government, U.S. And
How does political risk kind of follow with like war exclusions? Does political risk kind of go around those traditional war exclusions? We had a podcast episode a couple of days ago or a couple of weeks ago, sorry, where we were talking about war exclusions quite heavily. But does political risk kind of cater to the same war exclusions?
Yeah, there are war exclusions in all the policies, sure, but they're really implemented, really used, because it's not been a particularly litigious area.
Yeah, no, no, that makes a lot of sense. So it's kind of taking a step back from these specific examples and kind of back to you, Kit, specifically. You said that you had spent now 35 years, and this was in broking specifically. Yeah. When you are talking to clients about political risk broking, how nuanced is that conversation? Because in my experience, obviously I did primarily mining. This was mostly P&C type coverage, very different type of coverage, but I'm sure mining companies had their own political risk coverage. And there, the kind of risk level or the sophistication towards the risks that they were handling was varied, right? But when we're starting to talk about political risk, I assume that you're meeting with chief legal, you're meeting with the legal staff at these firms, not necessarily just the CFO who's looking for the best deal on their insurance premium.
Yeah, that's right. We're not generally talking to the risk managers of companies, because they wouldn't understand political risk. We're talking to the finance guys. We're talking to the export sales people. We're talking to the project people. So you're talking to people who are pretty clued up in what they want. And if you're involved with your clients are commodity traders, like the big guys like Vitol or Trafigura or people like that, they will be extremely clued up on what they want, and they're pushing very hard for you to get their cover placed, but they will understand exactly what they want.
No, that makes sense. And during that time that you were in insurance broking, you spent most of your time at Gallagher?
Now, I had most of my time actually was pre-Gallagher. I was at Aon.
Right.
So I got recruited into the industry after this conference when I spoke about international affairs, and I got approached by a broker called Hogg, who had the main political risk insurance broking outfit called Investment Insurance International, and so I was asked to join II, as it was called, Investment Insurance International. It had a sister company called specializing in credit insurance, which had the deeply difficult name of CIA, the Credit Insurance Association. And so some of my colleagues, when they went to the States, had a bit of a problem getting through immigration. But no, they were the precursors. And so I started with them in, I think it was 82, 83. And but then they got bought in the 90s by Aon. Aon was buying up every broker they could. And so we then became part of Aon. So I was with Aon until 2003. And then the last 12 years of my full-time career was with Gallagher.
And how much would you say that the kind of insurance broking space, on I guess on a general scale, but also on a specific political risk scale, how much do you think that's sophisticated over the time that you were there? Because I can imagine that with the influx of data and insights and the higher level of communication on global news, that this kind of changes things and changes the dynamics of how you deal with political risk.
Yeah, I'd said over my career, a vast difference between the beginnings and the underwriting skills and the knowledge to what's happened now. When I started, there were two syndicates, so underwriting at Lloyd's, and sometimes a few following markets. But I was always staggered, having been on export sales teams around the world, how slightly ignorant people were, but they were still putting down big lines of cover. They thought it was exciting. But now, of course, it's a totally different factor. There's a vast groundswell of experience, and most of the insurers have advisors, political risk consultants who they can get opinions from, and so it's a totally different ballgame.
Well, one thing I heard a lot when I worked, things have changed a lot, and I'm obviously one of the newer generations within the insurance space. But when I first joined, I heard a lot from my colleagues that they were starting to feel this. Underwriters, they take the risk profile, they pop it into the actuarial model, and they get a price, and then the wiggle room on that price is incredibly limited. But like you said, within political risk, there's not as much. It's not as much model based, right? There's a lot more factors that can go into what does the current political climate actually look like. Do you feel that you had um, a very large, I wouldn't say advantage, but I guess ability to negotiate on that price by bringing in your own insights, by bringing in your own, experience? Or was it very much, offer and accept in these types of situations?
No, I think certainly at the big first few years, my experience was invaluable because I could say, I've been there. I've been on the sales sides. I've been there, and I know this, and this, and you shouldn't be worried about that. And that was very important. I think it's like I can. One of my daughters is a political risk broker, and obviously, when I talk to her, it's clearly much more structured these days,
Yeah.
and the underwriters have a much more sort of rigid approach.
Yeah, no, that's kind of what we're hearing a lot is that this kind of influx of data kind of changes things. Uh, I guess my kind of follow up there is then when you're looking at these different underwriters, now there's a lot more, foreign capacity within the market, right? There's not just underwriters in London, there's US ones, there's ones from China, there's ones from the Middle East. Did you ever recognize that there was a difference in appetite depending on where this capacity was actually coming from in terms of their perspective, right? Like, Middle Eastern insurance underwriters having a better understanding of cultures and norms there, or thinking about the Chinese ones and this like requirement to have local partnerships to even be able to import and export from China. Is that something that you ever came across?
Oh yeah, very much. And as the market developed, a lot of the London syndicates and companies underwriting political risk would set up mainly in Bermuda, Singapore, and then Dubai. And with Singapore, for example, if we had a risk in Indonesia or say Myanmar, you probably would be better going to the underwriters in Singapore because they would have a better feel for that market. And I had a lot of business coming out of Southeast Asia, so yeah, that would be the underwriting market I would go to.
And yeah, I mean, I think it makes sense that having these localized offices, but Bermuda, Singapore, Dubai, are they then the biggest now in political risk, or is London still the heavy?
London's by far the biggest, but yeah, and New York. There's a market in New York, but I'd say in terms of size, I mean, London's definitely the biggest,
No, okay.
and there's also Paris. I mean, there's insurers in Paris, and they'd be quite good if you wanted to have a risk. If the risk was in Francophone Africa, it would be a good idea to go to the Paris underwriters because they would understand more about Senegal, Mali, these places.
I mean, that makes a lot of sense. I think that there is that. London does have a huge cultural, historical relevance in a lot of these regions. But it makes sense that it's the same with France. I guess that it's the same as what I was saying in the sense that you go to a Middle Eastern insurer to help underwrite things in the Middle East because they understand those dynamics a little bit better. What do you think is the number one like nuance within political risk that people either seem to fail to understand properly, or has a much larger weight than perhaps some of the other types of insurance products?
It's really hard to say. I think it's constantly evolving. It's constantly being aware of what's going on in the world. It's constantly being aware of economic factors, of political factors, trade patterns. It's a constant dynamic, I think.
Yeah, no. I mean, I think that one thing that I used to like to say when I worked in mining was that you could take the exact same risk, and if you're placing it a couple months away from each other, it's going to be a completely different reaction from the market, right? Because we're talking about reinsurance premiums might change, the general market condition, hard market, soft market, right? But I think for within political risk, it could be from one day to the next, right? Like did we actually sign that deal yesterday, or did we wait to sign it today? Because I just read some news that's going to change this.
Oh yeah, sure. It's very dynamic, and things can change. And as you also said, capacity can go. So capacity can go on a country, and your deal's queuing up to go there, get covered on, but you can't find it because the capacity for that country. You find that with the trade patterns, with the investment patterns, some countries become hot, and and everyone wants to do deals with that country, and there's only a finite capacity to cover the deals of that country, and when it goes, it goes.
How long are the policies in political risk? Are they also 1 year cyclical or
I think up to 10 years.
10 years?
10 years, yeah. I mean, obviously, not too often, but I'd say 3 years. Uh, the shorter, the better from the underwriter's point of view, obviously.
Yeah.
But and that's why commodity deals are very popular because they tend to be quick turnarounds. Yeah, stuff in, stuff out, either counter trade or barter or payment risk. But there are plenty of 3 year, 5 year deals, um, and they would tend to be export finance. Selling equipment, plant and equipment, or aircraft or whatever it is on 3 to 5 year deals, and but then occasionally you get a 10 year deal, and that's harder to get placed, obviously.
And what kind of risks would be a 10-year deal versus, the shorter ones are typically these commodity ones,
Yeah,
these
sure.
trade credit scenarios that you're talking about. But do you have any examples from your time where you had actually placed the 10-year deal? Because for me that sounds incredibly foreign, right? Underwriters obviously love the short turnaround time. They love the
Yeah.
ability to recheck how the risk profile has changed. 10 years is quite a long time, especially in political risk, I can imagine.
10 years is a very long time. But I used to do for an aircraft manufacturer selling uh, aircraft that could be modified for defense purposes, and they'd be sold to air forces around the world, and they'd be sold on 3 to 7 year deals. And so basically, we'd call it either buyer credit or supplier credit, and you'd get a 15% advance payment, and the 85% balance would be paid in equal declining tranches over the rest of the period, every 6 months. And so one could cover those deals because the point was that they reckoned that the Ministry of Defense and the countries concerned would have first access to the budget, and they would be paid. So they were 3 to 5 to 7, and then you can get some projects, some larger infrastructure projects where the requirement is for 10 years cover, and that's when the 10 years comes in.
Yeah, yeah. I mean, it's just for me I'm so used to the cyclical nature of insurance and insurance broking. So that idea that you sit on something 3, 4, 5 years, 10 years even is crazy to me because I could imagine you sign a 10-year deal, a 5-year deal, 7-year deal, and the situation changes quite drastically.
Mm.
Would the insurer ever decide to cancel the policy ahead of time?
Well, the policy is normally non-cancelable.
Okay.
Yeah. So yeah, but there are various mechanisms. If things go wrong, you can insist that the exporter or the project people have what's called an acceleration clause in the in the contract, the export contract, and under the terms of the acceleration clause, if a payment is missed, if a 6 monthly payment is missed, you have the right to demand full payment of the outstanding, and then obviously negotiate with the underwriters. So there are various mechanisms of trying to ameliorate the problem.
So could they have some sort of specific warranty or exclusion in them saying if a specific event occurs, this policy is no longer in place?
So there are exclusions, and so that would they're nenegotiated, obviously.
Okay. Well, I mean, I guess that's just like any other
Yeah,
insurance
sure. Yeah,
policy.
sure. Yeah,
Then at the
yeah,
end of the
yeah,
day,
yeah.
there's a lot of modern events right now that I think can kind of fall under the political risk sphere. I mean, we've already touched a little bit on Russia, Ukraine. We've already there's all. We already talked a little bit about Afghanistan. There's the ever-changing political situation around China and Taiwan. One recent situation that I actually kind of fell under my radar because it happened in many small events, but I don't know if you've heard of Africa's coup belt right now. There's a strip of countries across Africa right now, Sudan, Niger, Chad, Gabon, who have all had coups this last year actually. And I remember seeing some kind of conversations come out from some of these countries where these new military leaders are saying, okay, we're going to seize the means of production when it comes to oil fields, when it comes to these different aspects. I guess it's a two-part question. Is this something that you've heard of actually, cause a little bit of a stir or a ruckus within the market? And how, let's say you're a neighboring country to one of these, right? Coup belt, they have nothing to do with each other. It's kind of, it's not like one led to the other or there's a big wave of coups going through. But how does this kind of impact your clients' ability to get insurance placed when we do see trends like this?
Well, it makes it much harder because, and certainly not a lot of business would be obviously underwritten on Sudan for many years, or a country like that, because of the history. Before the present civil war, a lot of problems. I have placed business in the Sudan actually, but years ago for a Malaysian group, and they were in a big oil deal in the Sudan, and again it just makes you think because it was when the government of Sudan was Muslim, and Malaysian being Muslim, the feeling was that they had a better chance of the project working out than a Western company would have. So
Yeah.
these are all the sort of fluidities about the market, which makes it one interesting and two maddening.
Yeah, no, I can imagine. I can imagine. But I guess that goes back to what I was saying, right? I mean, an underwriter from a specific place may have a specific risk, but also the source of the client, right? If we're talking about a Malaysian oil company, or if we're talking about Shell, or if we're talking about a different one, they're going to have a different experience going in there. And then it's very much onto the broker, right? Like going back to the insurance aspect, going back to your experience here, to be able to tell that story in terms of why we think that this, not only why is this coverage sufficient for what we're doing to the clients, but going to the market and saying why we should not be charged an arm and a leg for this type of risk.
Yeah, that's right. It's going back to the old thing about one of the beauties of insurance is, know your client, getting to know your client and creating a relationship and getting to know their business, and that helps in the whole process.
Yeah, no, 100%, 100%. One thing that we trying to switch tracks a little bit. One thing that we spoke last time with our previous guest was kind of this. We talked a lot about talent, and we talked a lot about how can we build good insurance broking talent, and it's a little bit different from your story, right? Because Razak, who he started his insurance journey by studying for an insurance certificate. You went the lawyer route and went into political risk. Do you think that political risk, people related in the political risk insurance space, need to have a lawyer background like yourself or a direct experience background like yourself? You did this international import export. Or do you think that there is a certain type of person who perhaps just caters better to the political risk space?
Yeah, I think it's when I first joined the insurance market, okay, I was doing political risk. I'd say the amount of graduates going into the market was lower than I was expecting.
Yeah.
In general, I mean, just over because it was a fairly incestuous place. Your father was an underwriter, your father was a broker, your family were, and a lot of people went straight in historically into from school. But I think that's changed, and it's particularly changed in the political risk market, where I'd say most of the brokers and underwriters would be graduates, and some would have languages, some would have done politics. Just take example, my daughter, she did politics and Spanish at Bristol University, and and it was an obvious place for her to go.
Mm.
Um, but yeah, so it's very very definitely I'd say evolved.
Yeah, I mean, I remember from my perspective, I always thought that the political risk space kind of falls into this. It's a little bit funny that the company you referred to earlier was called CIA, but there is this little like CIA type, right? You have this background in politics, you have this background knowing different languages will help you understand the dynamics of that region better, be able to talk to clients from that region better. Um, it does feel a little bit a CIA or Secret Service type to kind of deal with these political risk deals because when you're talking about politics, things can get muddy incredibly quickly. So I guess back or I guess a follow up question would be: do you think it takes a different type of person to work within political risk insurance versus any other type of insurance?
But I think you've definitely got to be very very interested in world affairs.
Yeah,
I think you've got to have a very inquiring mind, and I think and just be very internationally based. I think those are absolute precursors. And I'm not saying that people in other classes of business don't have. The big differences, of course, as I said earlier, is that political risk brokers and insurers essentially are not dealing with risk managers. Risk manager who places for a corporation or a company, the general insurances, in my experience, some are different, some do, but most of them haven't got a clue about political risk insurance. And you're dealing with different types of people.
yeah, yeah. I mean, it's even when you're dealing with the risk managers, they may not fully understand insurance, right? So, I mean, I think trying to drop, going back to my experience working with people who worked on mine sites, right? They would have a local risk manager there. It's a little bit different when we're talking about one specific property, when we're talking about the whole company as a large, and we're talking about how the operations of this company kind of span across, yes, we have this specific thing we're exporting, but what is the actual journey of getting it from A to B? What is that company's journey getting it from A to B? Um,
Yeah, and don't forget for the companies, they have other conduits for insurance, political risk insurance. They can use the government schemes for their own country. So each major country will have a government scheme underwriting it, and they can actually do longer periods of cover normally. Or you have a multilateral cover. You've got MIGA, the World Bank. So there are different alternatives.
yeah, and it's quite interesting. So when we've talked about like government schemes in the past, we've talked about it in the context of like natural catastrophe in terms of providing in the U.S. providing backstops for floods in terms of when claims hit a certain level, FEMA will come in and they will help provide some capacity for the insurance industry. Or if we're talking about Japan, for example, they've created kind of a facility with international insurers to come in. But it sounds like the way that the government interacts with political risk is a little bit different. Are they directly providing capacity or competing against private markets in this space?
They're competing, and they will definitely have an edge in the longer term covers. So they'll be very big. Say in Britain, they'll be very big and covering big aircraft deals, British Aerospace or Rolls Royce, long term, very large contracts. That's the area they'll be very good at. But they won't be so good at the fast moving commodity area. Is more nimble. So there are horses for courses.
Yeah, no, 100%. And is that ever a situation where you'll have a split slip? Some of this might be government. You may add on top some private markets.
You might well reinsure some of the government schemes.
Oh, interesting. Okay.
So,
Okay.
yeah, that does happen. So the smaller export credit agencies in particular in Europe will and in the Middle East will get reinsurance from the private market.
All right. All right. We've talked about a lot of different things today. Is there anything specific that you want to kind of bring up? I have a couple other points, but I also want to, open up the floor if there's something that you find is relevant to the conversation about political
No,
risk.
I just think that as I've tried to explain, that it's a market that's grown very rapidly and it's become a big business.
Yeah. One of the things that we've touched on outside of the podcast, obviously, is dialogue, right?
Yeah.
So we Mo and I, we do have a insurance startup. We're not going to touch on that today, but Dialogue was another insurance startup. And how do you? I guess there's two kind of topics that I want to explore here, right? In the sense that what was the thing that drew you to that, and how do you see technology playing a role within political risk insurance? Because obviously data is very quickly seen as technology, right? It's, all this information comes in externally. We can use this information. And then we had a risk consultant on a couple of weeks ago where we talked about satellites. We talked about drones being able to provide data and insights. Do you ever see tools or technology like this being able to play a bigger role within political risk?
Yeah, I mean, we decided. I was asked to join Dialogue and invest in Dialogue because I through personal contacts, and it was a good idea. But I think Dialogue, we built a very good platform, but we built a platform for a market that didn't really want the platform. So we had clients, but we never had the critical mass, and a lot of effort was put into, and obviously putting a platform for political risk for the reasons we've been discussing is extremely difficult to
Yeah.
cover all the nuances.
Yeah.
Yeah, I think it's easier for trade credit or export credit because the ultimate you're talking about payment risk. Will they pay or will they not pay? And it's easier to model that. But I think the product was good. But one of the reasons that we had clients, underwriter clients, and deals would go through, but we never had the critical mass. And I'd say two or three reasons for that. One, the big brokers were a bit not invented here. They had their IT teams, and they didn't want some external upstart upstaging them. And secondly, the market is booming and doing very, very well. There's a lot of demand coming through, a lot of business being placed, a lot of money being made, and a lot of the brokers were scared of disintermediation, saying, "Hey, you've got a platform, great, but you may be cutting us out."
Yeah.
And so we took the view that we could have carried on slogging away, but we didn't want to be losing money any more than we put in. So we've gone into members' voluntary liquidation. So to do it nicely and steadily. I think we're probably 5 or 10 years too early.
Yeah, I mean, and that's typically the general consensus within insurance, right? It's not necessarily that you're 5-10 years too early, but insurance is also 5-10 years behind, right? When it comes to technology like this.
I didn't say that.
No, no. I mean, I said that. I said that. I'm not putting words in your mouth. But but there's so many different types of technology that are now entering insurance, right? Like I referenced with the satellites and drones and things like that. Is that ever something you would utilize or think about within political risk in terms of where, let's get a live feed on what the situation looks like in a certain country? Or are we looking more at macro trends in terms of what is the news saying about certain things that could be changing in the near future?
I'd say it's more macro and
Yeah.
yeah. I mean, it's interesting because moving on, and some of these markets can grow very quickly. Look at cyber. 10 years ago, cyber was tiny.
Yeah, no,
Now it's a massive market.
100%. And is there any overlap between cyber and political risk? Right. We talked about a situation recently where I think it was Merck, if I remember correctly, they got hacked by a Russian hacker group. They had a war exclusion on their cyber policy. They actually ended up taking it to court, where they actually ended up winning in the end because the court decided the government or the insurers hadn't actually updated the wording to include cyber attacks. But was there overlap in cyber and political risk? And I can imagine it's probably going to increase over the next coming years. But was there any overlap in that space when you were there?
Not when I was there, no. And I think now one would be looking. People would be thinking pretty hard about it now, and in terms of exclusion clauses, and it's certainly an area that you'd be very aware of now.
No, 100%, 100%. I think we're slowly approaching the end of the podcast here. I was wondering if you kind of any like final thoughts or any words of that you would provide to someone who's interested in entering the political risk space.
Well, I would definitely. I mean, I've encouraged a lot of my friends' children to go into the business, and a lot of friends and a lot of young people have interned with me over the years, and I'm pleased to say that most of them have stuck with it. So presumably they enjoy it. But for me, I get some things that the old at drinks parties or dinner parties. What, you were a barrister and then you became a broker? My God, what a come down. And actually, I say to them, you know what? The best decision of my life. I really enjoyed my career. It was fascinating, and I was at the beginning of something that really took off. And I had a lot of international experience, a lot of international travel, and I wouldn't regret it. So that's the way I tell the story.
Yeah, no, it sounds like you had an absolutely fascinating career. Thank you so much, Kit, for coming on to the podcast today. We really, really appreciate having you on. It is such an interesting topic, political risk, and it's quite, I guess it's quite hard to get under the hood of it without having you here. So really appreciate having you on.
It's been a pleasure, Casper. Really enjoyed it. Thank you.
Thank you, everyone. This has been Coverage and Coffee, and we'll catch you next time.